Good morning, folks. It's 8:05 a.m. Chicago time on Tuesday, the 11th of October, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. This morning, the market seems to be moving funds to safety. The only items that are the only futures contracts that I watch that are up are the US dollar, the DAX, the Euro stocks, and the Bund. So far, the Bund just teetering on break even, with the DAX fairly strong, up 30 points this morning, or 30 basis points. It's trading at 10,652. So overall, the market's still paying attention to what's going on with crude oil. The pound is sinking. And that's really what's driving us right now. Lots of funds moving into Chinese bonds. The head of Russia's state oil company doesn't see the need to freeze production, and that's helping crude oil drop slightly, although it's hanging on to its latest gains. As far as what we're looking for today, we had our zoo survey results. They came in very strong. At 4.0 versus 0.5. We're clear until the U.S. labor market conditions index change, which is a preliminary reading. That comes out at 10 a.m. This morning Eastern. The expectations for 1.5. And then as far as speakers, we have Fed Speaker Kashkari speaking at 11 Eastern. Then we have ECB Speaker Mersch at 12 Eastern. And that's it. We have a bunch of bill auctions starting at 11:30 Eastern, and then again at 1. That's really what's driving the releases for the day. Let's switch gears and have a quick look at what was expected yesterday. So we yesterday, based on how things are setting up, and remember I drew on the weekly profile, I drew that the market is in a triangle compressing and almost reaching the apex. The expectation yesterday was that we open on the upper end of the range, test higher, drop back into the prior day's range base, and then continue higher. The main idea yesterday was for it to test lower and then push higher. That's what this hypo one is all about. Okay, and then the goal for a push higher is 166 from about 153, giving us 13 points, which is in line with the stats in this product. That did not happen. The secondary idea is to test higher early and then to move back into the prior day's range and start attacking 2149 and a quarter, which is the prior day's point of control. Friday's point of control. This is basically the idea that worked out for the day, although it was tough to see that coming until it happened. The third idea for the day, the tertiary hypo, was for it to attempt to push down, struggle up high above the prior day's range, essentially on the high end of the prior day's range, without getting down into the MC point of control, which is right here, this black line, and then to get initiative after that and pushing through. Here's what actually happened. So real quick, really tough read in the morning. As far as I could tell, the morning showed us that it had a fair amount of strength, and I was looking for continuation higher. So here it opens in an open auction. We have the market pushing up and pulling back. It didn't quite cross the point of control, but there was no driver early on. The driver came in a little bit later. You could see that the delta is also following the pattern. This was price and volume were in confluence here. It pushes up to 63.50, puts in a high, and then puts in a double top at 63.50, a clean, clear double top, and then a very, very weak high, and then it proceeds to fail below the mid that was not expected, although it is in the cards. A double top has an 82% probability of breaking, um, especially once the IB is done. Past performance is not indicative of future results. So with this being such a weak high with a double top near the high and a lot of volume, and you notice that the point of control did not shift down at all for the rest of the day. Very, very, very odd behavior here. This is an extremely odd auction, in my opinion. You had a very sharp point of control up top, and then you have a second high volume node in the middle, and then you have a third near the low. This is what we started to call an F-shaped profile. If you move this to the left, it looks essentially like an F, although this looks like someone's profile. The guy from anyway, so it shows that there's no consensus. We don't have a market that is cutting off at the extremes, which is what we would expect on a balanced auction. It just seems, to me personally, it seems very artificial in the way it traded yesterday. So if we look at how this thing played out, it certainly didn't complete its auction to the upside, leaving behind the weak double top and a small double bottom in the on the session. Yesterday's volume is very low. Remember, yesterday was a holiday in the U.S. That's a huge contributor to the fact, and overall the market didn't accomplish much. So today, what I did was this profile, this MC was started on the 9th of September on the gap down and drop. And you can see the MC point of control is 52.75, and that's the area that I was looking to be tested yesterday. I'm going to shift this MC forward, and you can see it's removing the volume from the days that are lower. I'm shifting the MC forward, and the reason I'm doing that is I'm looking at the most recent auction and looking at what has happened with the profile when you look at the most recent auction. And the fact is, it did not change much. We still have acceptance right in the middle. We still have acceptance at 52.75 as being the key driver or the key price below. The market is trading just below that at 51.50 currently. So what this has done is essentially hypo 2 yesterday, but it accomplished it overnight as opposed to during the day session. During the day session, it barely breached into the prior day's range and hung out there till the close. A very non-committed committed trading session yesterday. So my primary idea for today, let's take a quick look at the overnight session. So you can see here on the overnight, it immediately it opened up, it immediately tested higher, and it failed during the Asian session as opposed to the action coming in on the European session, which starts at 1 a.m. Chicago time. It failed on the European session with somewhat of an impulsive move. It has done its continuation. It has retested the mid. Here's your mid setup, and then we have an additional continuation move from there. Essentially another reason why this is kind of behaving a little bit odd, but overall the point of control is being shifted down. It's higher than it was yet in yesterday's or Sunday night session, but overall it looks bearish, and it looks like we're likely to retrace what we did on the 7th, and that's really the primary idea for today. The market is on its way, is attempting to pull back to where we were yesterday. So we're opening in a gap. The expectation, because we are again, we're not in new territory, so I don't expect an open drive or an open test drive, although those are very much possible. The expectation while we're in balance is an open auction out of range. The expectation is that we are likely to drop down early to 21.49 and a quarter, push through, find a base, and then start moving towards the low of yesterday's session. That's the expectation for hypo 1. I expect us to play inside of Friday's range. The secondary hypothesis, open auction, test higher, find its sellers, drop through, test the point of control, and then uh, chop around in the point of control area, and then later on find its way down to the closing gap here. The gap close at 46.50. This would be your second hypo for today. Okay, that's how things are shaping up. I just want to remind you, Thursday at 4:30 Eastern, 3:30 Central, I'm holding a webinar and going over the software I use to analyze order flow and the depth of market, and to enter and exit the market, to actually figure out where my trades have the most likely chance to make their way towards a profit versus a loss. We'll be discussing that in depth on Thursday. Join us. All you have to do is look for the link in the notes in the YouTube video that you're watching right now. If you're watching this on the Stage 5 website, just go to the bottom right corner of the video, click the YouTube link, and go to YouTube, and you'll find the link there, or you see it right here, a Google shortened link. Hopefully, we'll catch you there. If you cannot attend, go ahead and register, and in that way we can send you the recording once the webinar is done. Anyway, that's what I have for you for today. Let's keep it short and sweet. I'll catch you tomorrow. Good luck, and just be patient this morning. Take care.